Hey gang, in today's episode, we're going to talk about realistic expectations when it comes to your return on investment. If you're a newer trader specifically, it's often hard to kind of figure out, what should I be making from trading? Should I believe what I see out there on the internet, or is it a bunch of junk? So let's discuss. Before we get into the dollar again, I want to ask you guys a question. I'm probably not going to lend my opinion on it because I don't really feel like it. You guys know my stance, but I would love to hear what you guys think about this. And before I do it, I know you guys are very passionate, right? This message is not from a troll. It's not from anyone being negative, right? So don't go attacking and being angry and stuff like that. You guys get protective. I know, and I love it. Thank you. It's good to have a protective tribe. I'm just putting that out there. Not a troll, not an argument, not anything, just a discussion I had with a trader who is somewhat familiar with us. And I want to know what your guys' opinion is. And it came off a video where I guess I mentioned what I look for as far as return on investment. I always say, hey, my goal is to be average anywhere between 2 and 5% a month, right? If I average 2% a month per year, it's not a good year, but it's not something where it's like hang up trading, right? Anything under averaging 2% a month, you should probably hang up trading and just, invest your money in an index or something like that, right? Because it's going to get the same result, if not better, and it'll take up less of your time. If I can average 5% a month, that's a great year. That's a fantastic year. So that's always been my stance for many, 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 many years. Aside from those weird years where I thought I was going to be a millionaire in like 2 years of trading or 1 year of trading. So that's kind of some background information. But the comment said this. Now I'll read kind of the highlights of it. 2 to 5% a month. Are you serious? Maybe it would be more informative to see what your risks are being returned. Perhaps you're killing it, blah, 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 blah. At any rate, at a full-size risk of 2% a trade, we would expect to see 2 to 5% a day with a max drawdown of 6% a day or something like that. Perhaps you're talking about large swing or position traders, but for a day trader with a modest account, to be returning these sorts of numbers would be a mission that a strategy needs looking at and needs to change completely. And then I responded with some stuff. And then there was another one where it says, like I said, if you've got a huge account, then that's fine. But it's a small amount for traders growing a small account. I'm amazed, frankly, anyone would bother if they're just starting out. Is this really what you tell your day traders with a 5K account to expect nothing more than a 50 to 100% return a year? Again, I'm not going to get into it because my opinion. I'm going to sound like a broken record. But I would love to hear what you guys think of that. And again, it wasn't a negative, wasn't a negative comment, not a troll. Wasn't a troll. Put that out there. Jerry says, honestly, I personally don't know because I was originally told 5% a day as well, and it didn't work for me. And I'm glad you bring that up, Cherry, because that's really what I wanted to get out of the discussion is and I don't want to say anything's unrealistic, right? Because I've spoken to a lot of traders. I've spoken to a lot of traders on both sides of the spectrum. Some that have averaged 40% a year for 20 years and are completely fine with that. Some who have had, 500% years, really, really, really big years. And everyone is different and everyone's definition of success is different, right? For some of you guys, you may look at, if I told you, hey, if you made a 50% return on your investment this year, is that a successful year? Some of you guys would be like, hell yeah. Others would be like, no, they'd be disappointed. So, it's going to be personal to whoever is trading. The problem that I have with some of this stuff, however, is that for newer traders, like Cherry mentioned, is as newer traders, we don't know what to expect. And I'll give you a good example. I did a quick Google search and I just picked the first thing that came up. I said, I put in Google, I said, what should the annual return on investment be for a successful Forex trader? And the first thing that came up was this, and this is bizarre. Trade in the Forex market where it's possible to make more than 100% profits a week if you know what you're doing. Now you take that with a grain of salt because it's like, it's possible. So you leave yourself out there. It is possible, right? Anything is possible. You can make 1,000%. But then you get to this point right here where it says, blah, blah, blah. I myself figured out how the Forex market works, and then I made my own rules and strategies. And now I'm making on average 100% or more profits a week after taking the losses in the Forex market. Some of my profits were 100%, 200%, 400%, 900%, and 4,600% within a week. I'm going to slow that down in case you missed it. Some of my profits were 100%, 200%, 400%, 900%, and 4,600%. Not for the year, not for your career, within a week. But he does say that was a one-off time. And if you're someone new, that is like cherry. And you're Googling stuff because you don't know what your expectations are. You're just trying to figure stuff out. So, you asked Google, right? Same thing with, like, I see all this, I know a lot about nutrition and all that same stuff. You see all these crazy things about diets out there. And it's like, man, they're clearly spreading false information. But if you don't know, you don't know. And you got people following this dumb stuff where it's like, detoxify your body by doing this. And it's like, no, you don't, whatever. It's tough. And my biggest thing is, me, I've never cared what people make or what people want to make. That doesn't really matter to me. I just care about my own personal returns. Like, I don't care about what someone else is making. I don't care about what people think I'm making. I just care about what's in my bank account at the end of the year. But it does bother me with comments like the last one, where you create this false expectation because it sets you up for failure. And I've seen this time and time again. I've seen so many successful traders who are trading really, really good, and then they quit because they haven't made 100% in a day. And you're telling them, like, dude, like, you're just keep chipping away at it over time. You're gonna have a heck of a year. Like, you can have like an 80% return this year if you keep doing this, like 80%. But yeah, I should be making that in a month. And you see people ditch things that are really, 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 really good. It's kind of like that meme or that infographic where the guy is digging underground and, like, there's two holes or two tunnels, and like one guy is chipping away towards like the thing of diamonds, and the other guy like turns around where he's like one chip away from it. You see that all the time, so it's interesting. But going back to the original comment, yeah, some of your responses says, Cherry says, isn't it impossible to be profitable 100%? Well, he was saying he makes 100% return. So not a 100%, not profitable 100% of the time. The guy was saying 100% return. But it's interesting. And the point that I wanted to touch on real quick was with the small account, because you see this more, and I thought I did a podcast on this. I couldn't find it. But you see this a lot with small accounts. And one of the comments from the guy said, he said, hey, so how are your traders with $5,000 accounts, small accounts? How are they supposed to grow their account to the point where they can make trading make a difference? Because I think we can all agree, you make a 50% return off a $5,000 account, it doesn't really change your life. I mean, you make a 50% return off of a $20,000 account, it doesn't really change your life. But the thing that people don't realize is we got to look big picture. What you're doing is you're forming a habit. You're getting the ball rolling, right? If you expect to make anything life-changing with $5,000, then you're out of control. You shouldn't be trading in the first place. You should be at a casino somewhere trying to hit it big. The point is you are learning the skill. And you see a lot of people get with the mindset where it's like, I got to be super aggressive with a small account because I have to grow it as fast as possible. And that way, and then I'll get more conservative once I have a large account. Well, think about this for a minute, guys. If you are super aggressive with a small account, you're risking, let's say, 10% of trade, doing some, crazy leverage and all that stuff, right? And you're having success, and you grew your $5,000 account to a $20,000 account in a year. Would you all of a sudden get more conservative and stop using what's been working for you? Or would you just be just as aggressive, just with more money? right? Can we honestly expect people to be super aggressive with small accounts and then get more conservative? No, because those type of people that are super aggressive with small accounts, they're not risk averse. They're risk takers. And they're going to continue to make more risk because it's going to make them more money. So my advice was always this: you want to think big picture. You want to think to, how do I want to trade when I have a big account? And you want to develop those consistent habits with whatever account size you're starting at. And if you want to grow your account aggressively, you can do stuff. You guys have seen the money management spreadsheet, right? Our position sizing spreadsheet. You can implement an aggressive delta and grow your account faster that way. We like calling it an accelerator. But bigger picture, you need to supplement your trading account. And I won't go too deep into it because, again, I sound like a broken record. But while you have that $5,000 account, don't quit your day job. In fact, maybe get another job. Be an Uber driver, Lyft driver, Grubhub, right? Make some extra money. Tighten up your finances. Have a little extra in your savings, right? That you can dedicate to your trading account. So now when you make that 50% return off your $5,000 account, match that with another $2,500 that you saved from your odd jobs. And now you've got your 100% return. And then grow your account that way. Grow it by multiple income streams. You should be doing that anyway, but grow it by having multiple income streams. That's going to be a very safe way to accelerate your account, because half of that money that you're putting in isn't from trading. So there's never any risk to it, obviously, until it gets to your trading account. But that's always been my opinion. But everyone's different. Like I said, you have to define what your level of success is. If you're not happy with a 50% return a year, then you got to do something different. You can take more risk if it meets your profile, have more frequency, change strategies, do something else. It's up to you, but you gotta have a goal. You got to have a goal. So the tier 1 course really put me in my place. Yeah, it's interesting. And again, there's no wrong or right answer. The last comment I read, that was a 4,600% return in a week. That was a wrong answer, but it's all personal, man. Dungy says, I got stuck in the money phase of my journey early as well, and I found I was overestimating what I was capable of doing and spending money I had not returned. It was only after I went through our course, thank you, Duncan, that the reality of my journey became known, and I can see why I need to focus on building my skills rather than my bank account. I am now playing the long game as I want this skill set to replace my day job, so that it's my focus now. My account size will come from building funds via savings. Yeah, and it's just a different way of looking at it. I think it's two different mindsets in a lot of aspects. We talked about this in the coffee break yesterday with psychology and are you going to hold yourself accountable and do stuff that you're not necessarily forced to do. I think when we talk about treating your trading like a business, this is the biggest separator. The biggest separator in business, and many of you guys are business owners, is, when you're growing a business, you're not taking a massive amount of risk. You're growing your business for 5-10 years in the future. You're not risking your business being closed down, because most businesses are going to close down the first year anyway. So you're trying to survive, and you're trying to have something that is solid and sustainable over time. And obviously it needs to produce you money, right? But you're not looking at it as a get rich quick scheme. You're looking at it as a slow, steady growth type of deal. Real quick over on YouTube. I saw someone on Instagram the other day saying that 20% a month should be the minimum, that if you take 10 trades a week with 50% win rate and average risk reward of 2R, that's 5% a week. And I was thinking to myself, are people actually making these type of trade returns consistently? And the key is consistently, because here's what I want you to do. And this is the easiest way I can put it. So take whatever that return is, right? So even take the what was it, 2 to 5% a day, right? What does that equal over a year? What is 2 to 5% a day roughly equal? Because we know it changes based on your account size and blah, 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 blah. But what is that? That's like 400, 500% a year. So ask yourself this question, right? 400, 500% a year. And that's what the 2% a day. How many traders are doing that? Like, think about money and growth and how that works for a second. Think about what 500% a year is. Now think about 20% a month, right? 2,000% a year minimum. 2,000% a year minimum. If you're not making 2,000% a year minimum, you're wasting your time. I just want you to think about what 2,000% minimum is. And I want you to think of how your life would be if you were actually consistently making that. You would be the most wanted man on this planet or woman on this planet. There would be private jets and helicopters flying to your house, begging you. There'd be cars and girls and tigers and chocolates begging you to work. It'd be like the movie Swordfish, where they went and got that hacker. They'd give you no choice. Shoot, they might even kidnap you and force you to work, because that's how bad they'd want you. So, like, you got to be realistic. And again, they bait on people like that because and a lot of people aren't familiar with what money is, how money works, and what an actual, what returns in investment actually look like. And because we don't know that, it's easy to throw numbers at us and we're going to believe it. We're going to believe it. Duncan said to get 2% a day, how many trades do you need to take? You have to take something like 4 or 5 trades a day and have winners to cover your losses. That's the thing. And there's a few ways. So I was thinking about this morning, Duncan, a few ways you can get 2% a day, right? Let's say you're doing let's say you risk 2% a trade and you can get 1 win and just stop. Now, I tried that method before when I was a younger trader, right? My goal was to basically make 2% a day. And my plan was, once I got my 1 win, I would just stop for the day. And I would come in every day and just look for 1 win. So on day 1, I came in, hit my 1 win, got my 2%, shut everything down. I was good. The next day I came in and I took 2 losses. Crap. Well, now I'm down. So now I got to find 4 more wins to make up for those 2 losses to get back on track. And then that cycle continued. So on one hand, you could say, come in, get a win and leave for the day. Another hand, you got to capture your wins. You got to capture some of your bigger wins to cover for your losses. We all know that we're going to have losing streaks, right? We're going to have funks in the market where we take days where we just get, I think the trader said 6% max drawdown, where we get our max drawdown hit. We take 3 L's back to back to back and boom, we're done. Right? Well, now to get back on track to average that 2% a day, right? Because we just took -6, right? Now we got to be up at least 4% the next day. So that means we got to hit a hot streak, right? So we got to outperform what our average performance is. It's you look at the realistic picture of trading. I think it prints a much better picture. And this is why I just did a podcast on this yesterday as well, about that equity curve will show you what trading actually looks like. And you realize it's a bunch of ups and downs. Jason Greystone said this yesterday in the coffee break. Trading is 3 steps forward, 2 steps backwards, 3 steps forward, 2 steps backwards. And it's extremely difficult. Now, if you got a very high win percentage, that's a different story. But I would challenge people to, and this is why you do your testing, but challenge people to test it and see what a realistic return looks like for them first and foremost before hopping into anything with live money. Real quick, Cody says, exactly what most people can't deal with is those losses and how to handle them. Yeah, and when we talk about that, Cody, once those losses come, do you think people just keep trading? Oh, no, that's when you start doing the dumb stuff, right? That's when you start over trading. I got to make it back. Or you start missing out trades. Last 3 trades lost. So I don't want to take the 4th. And that's where you get into these psychological drawdowns that make your regular drawdown even worse. And then you blow up your account. Yeah. So again, I thought it was an interesting comment. It wasn't a bad comment at all. But I thought it'd be a good discussion piece because, we always I think it is important to talk about this stuff. Just to challenge your mind. You don't have to agree. You can disagree if you want. But I think if it at least tingles your mind and makes you think, then you can start going down that rabbit hole of doing more research that way. So in the episode, I did mention a money management spreadsheet. That is one of the tools that we give you with your Tier 1 trading membership. It's awesome. We call it a wealth accelerator because what you do is you put your numbers in, you play around with different versions of our smooth ratio money management strategy, and you see the effect that it has on your trading. So if you're someone that's looking to be super aggressive, if you're someone that's looking to be super conservative, or if you want to find that sweet spot right in the middle, the money management spreadsheet is what you want to play around with. Trust me, I've used it in my career since day one, and it's allowed me to accelerate and build my account while staying within my personal risk parameters.